look at the banking sector, and HDFC Bank is all set to come out with its Q1 earnings fine print, and the net profit is expected to jump 31% on a year-on-year basis. Gaurav Javalkar, my colleague, is here with all the expectations that the street is penciling in as far as the results of HDFC Bank are concerned. Gaurav, tell us what the street is penciling in. Profit expected to jump 31% year-on-year basis. That seems great.
The biggest private bank of India is going to report its numbers, and when we look at the numbers, we have already seen that the pre-quarterly updates were pretty weak for HDFC Bank. Deposit growth was muted. When we talk about advances, that actually shown a degrowth, and on back of this now, street is also expecting net interest income to remain a little muted or rather slow on a quarter-on-quarter basis. Let's not forget that we cannot compare the YOY numbers for HDFC even in this quarter, and on back of this, if we look at net interest income, they are now expecting net interest income to increase only by 2% on a quarter-on-quarter basis. We may see OPEX which can remain elevated for the bank, and as a result we may see PPOP going down almost by 19% on a quarter-on-quarter basis. Lastly, as a result we may also see PAT going down almost by 5%. When we look at net interest margins, now the street is not expecting any kind of decline in net interest margin in this quarter as well. They are actually going to look at any kind of commentary which can come for net interest margin, because we have already seen some contraction in CASA ratio, and at the same time we are already seeing some repricing happening in the deposits. Apart from that, when we talk about asset quality, they do not see any kind of risk for HDFC Bank specifically for this quarter. They are expecting some kind of uptick when we talk about some slippages, because this is first quarter, and usually in first quarter agri book can show some kind of slippages. Lastly, they are also comfortable when we talk about credit risk, the credit cost, because they are expecting the contingent and floating provisions to take care of the credit cost. When we talk about HDFC Bank, there is another catalyst, that is MSCI weight increase. Now, let's not forget that this MSCI will increase, and MSCI will actually announce the weight increase on August 13th. So definitely watching out on that date as well. But on the numbers front, now the analysts are expecting some kind of weak numbers for HDFC Bank in this quarter.
All right, thank you very much, Gaurav. We'll of course be looking at.
If you like this video, then like, share and subscribe to ET Now.